money to invest, and returns from past investment, roll over. But now, as you look at all this uncertainty, there's absolutely caution. You have to be thoughtful about not just what industries, what locations, how do you balance across different investment theses. So I would expect that it would not proceed at the same level of frothiness. But long run, we still have to look for important places to invest for all the same reasons that haven't gone away. We still need to invest in ESG. We still need to find technology solutions to labor. We still have to continue the digital transformation that every company is going. And we have to adjust for this world that's now changing from the fully global world we were all embracing in this particular conference to perhaps a post-global set of scenarios.
And I was just speaking just before you to the president of the World Economic Forum, and his message, he said, to global leaders here, and especially to government leaders, is that, look, globalization has done well for the world, and the last thing we need at this point in time is protectionism, and he hopes that that's not going to be the path that leaders will take. But we've already seen deglobalization play itself out over the last several years. In the current context, especially when we talk about the supply chain disruptions that we're seeing, China +1, strategies that are playing out, what is this realignment going to look like, and who are the likely beneficiaries?
Well, that's one of the trillion-dollar questions. I actually agree with WEF's president that globalization for the world overall, has created jobs, has created economic opportunity. Now, in this, what is actually going to happen, which parts of the world will choose to play, you can play out different scenarios. And obviously, two of the big questions will be, well, what is China's role? We kind of have a hypothesis on what Russia's role is. And therefore, your question is, well, who will benefit? I think we all have to figure, you mentioned China +1, post-globalization scenarios that look at investment and opportunities and business models that actually account for not knowing the exact answer to that, which means more resilience, more adaptability. And countries like India, as a clear example, which I know in people's minds, whether you're corporates or financial investors that have very attractive fundamentals in a globalization world. I could argue, your country should be one of the leaders here should be one of the winners that emerge once the dust settles here.
Yeah, that certainly is the hope, and that is what both government as well as industry is hoping for and preparing for as well back in India. But, you talked about some of the themes, and you said that irrespective of what happens in the short term, those are investments that companies and governments will need to continue to make for the long term, whether it is climate, it's food. For companies, it's more on ESG and so on and so forth. And Bain's doing its part there as well with the over $1 billion investment that you're putting towards the 4 social pillars that you've identified. But do you see that in the near term, especially governments find themselves fiscally constrained, and corporations are probably going to be more tentative given the environment? Do you see a pushback or a setback to some of these areas and some of these issues? I
think you've put your finger on the time dimension on this matters. We don't know how linear this is. We don't know how high or low the waves will be. So we do know that in the long run, corporations, financial investors, even governments have to enable continued investment in ESG, in technology, in job creation. Even as in some parts of the world, there's a big labor gap. In other words, there's not. And so investments in automation, all of that matters. The issue is the next, let's call it 6 to 9 months. The volatility, the range of scenarios because of the shock to the energy, food, supply chains. As we mentioned, while you and I might be sitting here unmasked, having traveled to Switzerland, there's a big country in the world where they're still at home and they can't leave their homes.
Absolutely.
And that affects the rest of the world's supply chain. So as we have to figure out how the next 6 to 9 months, every company and every country to some degree has to balance short-term, agile, resilient planning for many different scenarios, while recognizing in the long run we still have to make those investments. And that's where it gets complicated. And that's where even political forces, you mentioned governments, put that into the equation, because in the end we can make long run investments, but how does that translate to voting populations?
Yes, absolutely.
For example.
And that will be a key consideration in many countries over the next 12 to 24 months.
Absolutely.
Yeah, and that could dictate policy decisions and policy direction as well.
Well, it's very hard for some countries to make long-term decisions, and that is one of the challenges here, right? Because the time horizons to actually create the changes in ESG or automation, will often span longer than the time horizons of specific, I'd call it management teams for companies. We call it governments for countries. And that absolutely is a challenge. And that's why the role of business, Shereen, where often companies have to work across generations of leaders. I'm from the United States and the Philippines. In the United States, you might change governments every 4 years. Some of the time horizons here are much longer than 4 years.
Yeah, that is true. But, I want to understand from you what the boardroom conversations are at this point in time in terms of imperatives. Through COVID, the big digital sort of push has perhaps played itself out to some degree. Of course, there's a long distance for many, depending on where you find yourself on the curve. But outside of the digital transformation, what else are your clients focusing on at this point in time?
I would say until about 90 days ago, we were getting our arms around, yes, we understand the potential of digital transformation, and depending on what industry you are, what country you are, you're either already starting a journey or you're already getting done. And there's many aspects of digital, analytics versus machine learning versus enterprise technology versus cloud are very different. But we kind of understood that. We were all preparing for what the post-COVID world might look like, wanting to get the benefits of the efficiency we saw that we can actually do work via virtual platforms without having to fly somewhere and meet each other in person, while recognizing you have to meet each other in person because you also have to build relationships and apprentice and create training and mentorship and relationships. So those were some of the things that were in the boardroom, and then making our supply chain sustainable. Some of that hasn't gone away, especially decarbonization issues, social inequality issues, which vary country by country. It's just that now, in the last 90 days, you add on top of that such a big shock to our value chains, to our supply chains, to our supplies. Your country imports the majority of its energy from the outside. Well, suddenly that energy supply is not dependable. So that's what's happening in the boardrooms. Can we continue on the agenda that had multiple years while now dealing with all of these issues and second-order implications? Many countries in the world haven't had management teams that have dealt with an inflation environment for 30, 40 years.
Yeah.
And suddenly we have to deal with that. Credit, interest rates have been very reasonable in many parts of the world. How do we deal with, real versus nominal, or actually different, meaningfully different? So those are all the things that are now going on in the boardroom. It's like there's a lot of uncertainty. It's now more complicated, as I said, and so people are just figuring out how do we make decisions in this time frame, and it's hard.
Which are the sectors, and we've seen a virtual bloodbath across Wall Street and of course in other global markets as well, whether it's retail or technology. Just everything being sold off in the last few days. But which are the sectors that you believe will be most vulnerable on account of the current shocks, as well as with inflation and rising interest rates?
I don't know that you could call it a bloodbath. I said, corrections are a normal part of the business cycle, and we actually potentially have a point of view that, the valuations and multiples were getting unreasonable at the end of the last year. So things correct. So, it's hard to say which sectors. I'm never a stock prognosticator, but if you look at all of the forces I mentioned earlier, okay, we're going to have energy constraints. What sectors are highly dependent on that? We're going to have an inflationary environment and prices of basic, and you can connect the dots.
Yeah.
When energy costs to your country translate into spiking product costs of basic commodities, therefore underlying demand that shows up in retail and consumer products, get hit, then yes, certain sectors will just get hit more than others. But I would say I'll try to balance that with still the long-term view, right? That if this globalization experiment that we've been working on for so many years, absent certain countries that won't participate in it, can actually work, then I do think we'll get past the other side of this, even though we might have a lot of volatility for about at least a few months, if not several quarters.
Yes, and you're absolutely right in pointing out the inflation impact. I think at events like this, it's been the ease of doing business for so many years, and suddenly it's the cost of living that everyone's talking about, and that has been a big shift and a big change. But hopefully, as you point out, it's going to be an aberration that we quickly get past, and the hope is that it's not going to run very long. But what are the priorities for you at Bain at this point in time, given the many uncertainties?
Well, we're sort of a consulting firm that is a little bit of a bellwether to some of this, because we do guide corporations and investors all around the world on this topic. And obviously, with all of these questions and uncertainties, we view it as it's not that it creates business demand for us, and it does, but we feel like we have a responsibility to some degree, to both help our clients as great strategic consultants to find the answers to these questions. And then we also recognize, like any other company, we're not just a consultant, we're a company ourselves. We have our own responsibilities. You mentioned why we want to invest in our own social agenda, why I committed as a company, like many of my peers starting 2.5 years ago, to be net zero carbon by a certain date. For us, that happens to be 2030. And so the analysis that we have to do internally, like any CEO, well, what's the source of carbon in my company? It's things like air travel. And so you do little things like, a few years ago, I would not have thought much about, I'll fly there, I'll do my work, I'll come right back. I know the carbon footprint it cost me to come from San Francisco to Davos, and I'm going to stay here longer to amortize the cost of that footprint over, more business and more use, or more meetings internally. We all have to do those little things individually if we're going to, walk the walk and walk the talk of what we're saying. And I do think leaders have to, have to role model that ourselves.
Yeah. So I would imagine that you're being asked many of the questions that I'm asking you this evening, and your clients are asking you those questions. So do you have the answers yet, or is it work in progress?
Well, I would say that because the answer does vary quite a bit here in industry by industry, and to some degree country by country, and as I said, because it's complicated, where you have to have the long-term perspective on your mission, purpose of the company, and what you're going to try to achieve 23, 24, 25, or the long term, versus how are you going to build an adaptable, resilient, agile strategy that can deal with the next 2 or 3 quarters. That's what the general construct of an answer is. Have a flexible strategy that's anchored in the long term, but you can adjust the next few years, that prepares for inflation and supply chain and post-globalization and post-COVID work. And a lot of them are interwoven with each other. The answer for every company is sort of, or every country for that matter, is anchored in that. And so I think that's, we haven't even, Davos hasn't even opened yet, right? We're here I'm looking forward to a lot of dialogue with peers, clients, business leaders from around the world, and hopefully we'll have more answers. We'll have more answers at the end. I don't expect to leave here like January 22 with all the optimism and excitement, but I would like to be more hopeful than the last few months. The last 3 months have been anyway.
So before I let you go, you said you don't expect a significant drop in deals or perhaps foreign direct investment as well, or private equity funding. Any themes that you're going to be watching out for in terms of all three?
No, I would say the allocation of where it goes, right? Because when you say, will overall volume drop? Yes, it will.
Yeah.
You ask, is it significant? You know, probably, definitely in the second half of the year. But as everyone thinks about allocating on what industries, on what investment thesis, even on what countries. You mentioned things like, you know, China plus one. Every company, whether it's a corporate direct investment or private equity, they're rebalancing the portfolio. So, you know, if you happen to be in a country where, you know, it makes more sense to invest in this country versus that one, you might not see a drop in that particular place. I'd like to, you know, and I personally, and I know my company is quite bullish in the long run on the opportunities in India, you know, for all the good reasons. So.
Well, on that note, thanks very much for joining us here in Davos 2022, and I hope that you do go away feeling a little bit more reassured. I hope that that's how all of us go away from here, from the World Economic Forum's annual meeting, with some hope and some optimism about the road ahead, which at this point in time looks fairly bleak given all the challenges,
Lots of challenges for sure,
that we spoke of.
Yeah, and we have to care and think about, you know, all those people that are really challenged. But yes,
absolutely.
For you and I, let's be hopeful.
Absolutely. Well, we will take a break. The conversations continue here on CNBC-TV18. Don't go anywhere. We're back in a minute with more.